I hope you have learned the acquisition of business from the previous lecture, what we have seen. What is meant by acquisition, how the acquisition process takes place, and what are the reasons behind acquisition, and what are the different forms of payment, like we call that as purchase consideration. So what are the different forms of payment and determination of purchase consideration, different forms of payment, and what are the journal entries so specifically with the reason I have explained in the previous lecture. So now we'll be looking on the problem point of view. So like a case study, we'll be discussing one particular company which is registered and acquiring a business of A and Co. A and B and Co. Right? So that business will be, that problem we'll be looking into now. How to solve that problem also we'll discuss one by one. So here, Woodlands Limited is registered with a capital of rupees 10 lakhs in equity shares of rupees 10 each. Acquired the business of Mrs. A and B. The balance sheet of whom at the date of acquisition was as follows. One is bills payable, rupees 16,000, sundry creditors, rupees 30,000, reserves 14,000, capital accounts, which means partner A and partner B 70,000 and 70,000 each. Total together it comes around 1,40,000, and total of the liabilities is to the sum of rupees 2 lakhs, whereas in the asset side, cash at bank is 29,000, bills receivable rupees 13,000, and sundry debtors rupees 48,000, stock rupees 18,000, furniture and fixtures rupees 2,000, and plant and machinery 40,000, asked the land and building rupees 50,000. The total of that asset side is 2 lakhs. Now, the assets and liabilities were subject to the revaluation at the time of acquisition of the company. So here, the assets are revalued as follows. Plant and machinery have to be depreciated by 10%. That means only 90% is realizable. Right? So we have plant and machinery 40,000. Of this, only 90% is realizable. Then furniture and fittings, which rupees 2,000. Of this, the 15% need to be depreciated. That means only 85% is realizable. And land and building to be appreciated by 20%, which means land and building we have 50,000. It has to be increased by 20%, around 10,000. That means it comes around 60,000. Then a provision to be made for bad debts on debtors at 2.5%. So which means the debtors value we have 48,000. Of that, 2.5% need to be reduced to get the realizable value of asset with respect to debtors. Then goodwill of the firm was valued at rupees 24,000, whereas there is no goodwill in the balance sheet. Now during the revaluation they have decided to value the goodwill. Now the consideration, the purchase consideration was to be discharged in two ways. One is allotment of 10,000 equity shares of rupees 10 each at rupees 12 each, and then third, the allotment of 500 14% debentures of rupees 100 each at a discount of 10%. And the third one is the balance, whatever is there, have to be paid in cash. So here, so simple. We have seen the different types of purchase consideration, how to be settled. Right? So we have seen last lecture the calculation of purchase consideration. Of this, I also explained you there are different forms of purchase consideration settlement from the acquisition company. So there are 4 models. One is 4 forms, 4 different forms. One is settlement by cash. The entire amount can be settled by cash. The second one, the entire amount can be settled by equity shares, by the issue of equity shares of the acquisition company. The third option, entire amount of purchase consideration may be issued by debentures of the acquisition company. Or the fourth option is combination of cash, equity shares and or debentures. That means is a combination. So this case gives you the fourth option, which means the purchase consideration, they say, have to be settled. That means discharged through allotment of 10,000 equity shares, allotment of 500 debentures, and balance in cash. So this is the fourth form of purchase consideration mode of payment. The cost of acquisition, that is another important area which we have seen in last class also, which means the acquisition cost of the company amounted to rupees 5,000. Now you are required to show the journal entries in the books of the company and prepare opening balance sheet of the company after the acquisition. So this is another important area. Last class we have seen what are the format of journal entries. Now we need to pass the journal entry as well, and we need to prepare the opening balance sheet of the acquisition company. This is the entire brief summary of the question, and here what are the things we need to pick up. And please start the sum by making the dot marks in all the additional information. Wherever the additional information is there, make a dot mark. Right? So that we can make the respective alteration to solve this sum in a proper way. So one is the plant and machinery. So make a dot mark against the plant and machinery because it has to be reduced by 10%. Or we can also calculate 90% as realizable value. Then make a dot mark against the furniture and fittings. And that is important because it comes in different accounts. So if we go in the random order and at last we may miss one or two. So that's why we mark everything, and then if we proceed to solve the sum, it would be always better. Then furniture and fittings to be depreciated by 15%. So make a dot mark against furniture and fixtures. And then land and buildings. So there is an appreciation. So again make a dot mark against land and building. And then a provision to be made for bad debts. So make a dot mark against debtors. And goodwill have to be written off. So make an underline for these adjustments because this have to be introduced newly into the balance sheet, into the calculation. So these are the additional information which have to be marked respectively. And apart from that, the first line. So now the most important thing is the capital of rupees 10 lakhs, which is stated in the first line of the sum, which means it is Woodlands Limited registered with a capital of rupees 10 lakhs in equity shares of rupees 10 each, which have to be used, which occurred for the business of Misters A and B and Co. So this have to be marked for our calculations and preparing balance sheet at last. And the considerations, please make a note. The allotment of 10,000 equity shares of rupees 10 each, which has a face value, but it is issued at a premium, which means they are paying rupees 12. They are issuing the shares at rupees 12, which means it is at a premium of rupees 2. That means it comes around 12. So this have to be make a note. And then allotment of 514% debentures of rupees 100 each at a discount of 10%. So which means 90 rupees they are issuing. So these things we need to use it for our calculation. I hope you understand the question now. Now let me take you towards the purchase consideration calculation. the calculation of purchase consideration, and this is most important step in the acquisition of business. So that is calculation of purchase consideration, because the entire sum is purely based on the calculation of purchase consideration. Now take one by one. The assets taken over by the company. So what are the assets we have taken over directly without any adjustment? So as we have marked in the balance sheet, so we have marked land and building, plant and machinery, store furniture and fixtures, and sundry data. Right? So all these four we have marked. Apart from that, we have only three items which are without any mark. So that is cash at bank, rupees 29,000, which means we can take that amount from the balance sheet as it is. And then bills receivable, rupees 13,000, that is also directly from the balance sheet we can take. Now stock is also directly from the balance sheet we can take without any alteration. So these three items we can take as it is. So that's why I asked you to make a dot mark against respective accounts where the adjustments we have. So now you are able to pick up easily. Whichever there is no adjustment, we can take the amount as it is. So cash at bank, rupees 29,000, bills receivable, rupees 13,000, stock, rupees 18,000. This amount does not have any adjustments, we can post as it is. Then another important account is the goodwill. So goodwill, which has which directly they are calculated. So the valuation of goodwill did not we no need to do that valuation, rather they have given. So by seeing the reputation of A and B and Co, they decided to give for such a reputation. So for that, goodwill has been paid for rupees 24,000. So these have to be considered under the calculation of purchase consideration directly without any alteration. So let me repeat again: cash at bank, rupees 29,000, bills receivable, rupees 13,000, stock, rupees 18,000. And the last but not the least, the goodwill, which we are directly given in the question itself, that is rupees 24,000. So these four items we can take as it is. And now let us take the other accounts of assets. We are taking only assets. Do not worry about any other things like acquisition cost or settlement, etc. Now we are going to calculate only purchase consideration. For that, we are picking up the assets whichever is listed out in the balance sheet. So here the assets listed out in the balance sheet, whichever do not have any adjustments, only those accounts we have taken first. And then we have to take the other assets and do the required adjustments one by one. Now let me take the sundry debtors. So what are the provisions is there? So they ask you to provide your bad debts at 2.5%. So that means provision for bad debts, it comes around 2.5% in total. If you calculate out of 48,000, it comes 2.5%. Do all these workings. So definitely, because if you use mobile phone and directly calculate, we may held in doing some error. So 1,200 rupees provision for bad debts. So it comes, sundry debtors comes around 46,800. Next is furniture and fittings. So 2,000 rupees we have and depreciate at 15%. So out of 2,000, 15% if you calculate, then it comes around rupees 300. It comes around rupees 300. So the total amount, the realizable value of furniture and fixtures, it comes around 1,700. And plant and machinery. So the depreciation is most important here. They depreciated the value at 10%. So plant and machinery is 40,000 and depreciated the value at 10%. So out of 40,000, 10%, 4,000 have to be subtracted. So now the amount is 36,000 is the realizable value of plant and machinery. The next item is land and building. So land and building, now the present amount is 50,000, but during acquisition, the real value of land and building is appreciated. So which means the value has been increased. The realized value of land and building has been increased by 20%. So the existing present value in the balance sheet of land and building is 50,000, appreciation 20%, rupees 10,000. So total value of land and building rupees 60,000. So now all the assets which were taken over by the company during acquisition has been summed up. But only the realizable value of assets. So total amount comes into 2,28,500. Now, what are the liabilities they are about to take over? So here they did not say any other adjustments in the additional information. So we can assume that all the liabilities whichever is there in the balance sheet, outside liabilities are taken over as it is. So here outside liabilities we have only two. One is bills payable, the other one is sundry creditors. So now bills payable rupees 16,000 and sundry creditor is 30,000. So both the liabilities will be taken over by the acquisition company. This have to be subtracted. So here the liabilities are not revalued, which means the liabilities are payable as it is. So it is neither appreciation nor decline in the value. So it is net amount have to be paid. So here the liability is taken over by the acquisition company. Bills payable 16,000 and sundry creditors 30,000. So total of liabilities. So only we need to take external liabilities. Please make a note. External liabilities are allowed to be taken. So the capital or the share capital, existing reserves, profit and loss account. So all these internal liabilities will not be considered. Only the external liabilities. So total external liabilities taken over by the acquiring company is rupees 46,000. So now net assets acquired is now called as purchase consideration. So now the total assets, that is gross assets taken over, is 2,28,500 and less the liabilities taken over 46,000. So the purchase consideration would be 1,82,500. Out of this 1,82,500, so the form of making the payment is in three forms. One is allotment of equity shares of rupees 10 each. So the purchase consideration rupees 1,82,500 is here in this sum. It is given in three different forms. One is allotment of equity shares. That means 10,000 equity shares has been allotted at rupees 12 each with a premium, and 500 debentures also allotted at rupees 100 each with a discount of 10%. So balance in cash. So now what we need to do, take that the 1,82,500 and calculate how the shares and debentures are given and how the balance amount in cash, how much is given. So that's what is most important here to come across in the calculation, right? So now the equity share capital is given to the sum of rupees 1 lakh. To the sum of rupees 1 lakh. Then debentures is given to the sum of 50,000, and through the equity share we collected securities premium, that means premium on issue of shares 2 rupees. So totally through the equity share capital we can give 1,20,000, and through the debentures we used to give 45,000. So 1,20,000 and 45,000. So 1,65,000 have to be subtracted out of this 1,82,500. So now what is the balance? That balance amount is here called as paid by in the form of cash or in the form of bank. So 17,500 is the balance. So what happens now? The 1,82,500 is divided into three forms as per the question. So that's why I am showing you the question slide now. Again, the question slide for the purpose you to make the calculation. So out of that 1,82,500, 1,20,000 through equity shareholders, equity share capital, and 45,000 through debentures, adjusting the discount, and the balance amount is by in the form of cash. So cash in here we can call that whenever the company gives settlement, it pays to settle only by check. So here we can call that as bank account. So settled by cash. So total amount, the balance amount comes is 17,500. So this is how we need to use that purchase consideration. First calculate purchase consideration as per the assets taken over by the company, subtract the liabilities taken over by company, and then the net assets can be called as purchase consideration, and then distribute those purchase consideration into the different form whichever stated in the question. So here we have distributed the purchase consideration for in the form of equity shares, in the form of debentures, and the balance in the form of cash, rupees 17,500. Here the equity shares, the students should not get confused with the face value, both equity shares as well as for debentures. So here the face value is rupees 10 for equity shares, and that is used only to calculate how much is the premium. The debenture face value rupees 100, that only we use to calculate how much would be the discount. So we need to focus only on the net payment. So equity shares, we adjust the net payment rupees 12 per each share, 12 per share, and for discount for the debentures we use rupees 90 per debenture. So that amount only we need to take, not the face value of that document. Right? So in that case, if you calculate for equity share is 1,20,000, for debentures it comes around rupees 45,000. It comes around 45,000. So balance amount in cash that is comes to the sum of rupees 17,500. So now, what are the things we have completed? We have completed all the asset side and liability side. We have used all these things, and we also revaluation have been done, and based on that we calculated purchase consideration, and we also framed the different forms of payment of purchase consideration. At last we also calculated the balance, how much to be paid in the form of cash. So now only one we need to focus, which is not focused till now, which we have not considered till now, is cost of acquisition of the company, that is rupees 5,000. Cost of acquisition of the company, that is rupees 5,000. So that we need to take into consideration, because it has been used by the acquiring company. It has been borne by the acquiring company. Hence, for that we need to pass journal entry. It will neither affect the purchase consideration nor affects the payment form. So the cost of acquisition is purely, since it is not given anything, you can assume that it is borne by the acquisition company. So for that we need to pass the journal entries only. So it will not affect any form of any type of calculations. I hope you understand the concept now, and now I will take you to journal entries. The journal entries. So what are the journal entries to be passed? So we have the first journal entry is, as we have discussed in the earlier lecture, which is there in the PDF, which is there in the YouTube link in the previous lecture, the forms of journal entries. What are the standard journal entries to be passed, which we have discussed in last class. Right? Please go through that if you have any doubt. Now I will just take you to pass journal entries with respect to these transactions. So what are those? Now, first journal entry is for purchase consideration. So for the purchase consideration, the journal is business purchase account debited to the vendor company account. Here the A & Co account. So here purchase consideration account debited to A & Co account. So how much is the purchase consideration? 1,82,500, which we have calculated. Same thing you can put. So here you can write the narration as consideration due to the vendors on the purchase of the business as per the agreement dated. So you can also make an asterisk marks and put up the same asterisk marks in the calculation of purchase consideration, because it is a working mode. For future also you can refer this. So how that's 1,80,500 has come. This is the major workings we have. So if you are very good with this working, then you no need to worry about anything. You can full-fledgedly you can solve the sum. Next, second journal entry. So what are the assets and liabilities are realized? For the next journal entry to be posted. Yes, one is the bank account, which is realized as it is bank account debited to rupees 29,000. Bills receivable account debited rupees 13,000. Sundry debtors account debited rupees 48,000. Stock account debited rupees 18,000. Furniture and fixture account is debited rupees 1,700. And plant and machinery account is debited rupees 36,000. Land and building account debited rupees 60,000. And goodwill account debited 24,000. So please make a note. We have taken all the assets in the debit side, but not the realizable value of the asset, not the book value, not the book value from the balance sheet. So if there is no adjustment, say the depreciation or appreciation in the asset, we can take the book value as it is. So here bank bills receivable are taken from the book value. Right? So the adjustments have been made in the purchase consideration table itself. From there we can take the amount in order. So bank, bills receivable, sundry debtors, furniture and fittings, plant and machinery, land and building, and goodwill in order from the purchase consideration table. And then credit to bills payable rupees 16,000, to sundry creditors rupees 30,000. And if you have not subtracted anything in the assets, say for example debtors, if you have taken the book value and subtract the provision for bad debts, that can be credited. The provision for bad debts have to be credited 1,200. If you have subtracted in the debtors itself, then there won't be a problem. So now, taking over the various assets and liabilities of the bank. So for that, you need to take the assets and liabilities, subtract, you will get the amount balance in the credit side. That amount is nothing but purchase consideration account. So that's how the purchase consideration comes as per our workings. The same thing, we are posting that into journal entry. So take the workings of purchase consideration. The same thing is converted into the journal entry. So if you are good with the purchase consideration table, that calculation in order, then the passing this journal entry would be so easy. So convert that table into the journal entry. So simple. The next is this is A and Co. This is A and Co. Rupees 1,82,500 that the purchase consideration is debit. And how these settlements have been made. So first journal entry, what is that? The purchase consideration account debited to A and Co account, the purchase consideration amount 1,82,500. Now, so what is that? So what is that to be focused? The settlement of purchase consideration. So the 1,82,500, as we discussed earlier, so we can distribute in the 3 forms. So for that, what are the forms you remember? Yes, equity share capital, debentures, and balance in cash. So in 3 forms we are settling the purchase consideration. So from that journal entry, we have to now settle. So now the A and B account, A B and company account debited rupees 1,82,500, and what are the accounts to be credited? Equity share capital account rupees 1 lakh, securities premium account rupees 20,000, which means the equity shares are issued at a premium. To debentures account, 14% debentures account, 14% debentures account rupees 50,000. So whenever you write the equity share capital or the debenture, please write only at the face value. Either it has issued at premium or it has been issued at discount. Do not worry about that. Either the premium or discount have to be accounted separately, either in debit or credit side, based on its nature. Hence, the equity share capital rupees 100 each based on the percent. And rupees 100 is the face value, so we need to put up rupees 1 lakh in the credit form. Securities premium, which means they are charging 2 rupees extra for each share. So 2 rupees into 10,000 shares, you will get 20,000. So securities premium account credit 20,000. Next, 14% debentures, the face value is rupees 50,000. The face value is rupees 50,000, but the discount on issue of debenture, it has to be subtracted from the debentures. Hence, when the debenture is in credit balance, then we need to post the discount on issue of debentures in the debit balance. So the discount is 5,000, that means 10% of the face value. So rupees 5,000. The discount on issue of debentures need to be debited. Now in debit we have 2 items. One is AB and Co. Debited rupees 1,82,500. Discount on issue of debentures debited rupees 5,000. And then in the credit we have 3 items. Equity share capital account rupees 1 lakh. Securities premium account rupees 20,000. 14% debentures account rupees 50,000. Now the debit and credit will not get added. Yes, because some amount has to be paid in the form of cash, so which we calculated. Hence, the calculated amount have to be filled up here, or the balance can be written as to bank account. Since the balance comes on credit side, we can write in the credit side to account rupees 17,500, which we calculated earlier. The same amount comes here also. Or you can post that calculated amount here itself. You will get both debit and credit equal balance. Now, the narration for this journal entry is allotment of 10,000 equity shares of rupees 10 each at a premium of rupees 2 per share and 500 debentures of rupees 100 each at a discount of 10% to vendors for consideration other than cash, and the balance of rupees 17,500 paid in cash as per the board resolution. So likewise, we need to write the narration in detail for this journal particularly, so that even if we refer in future, we will understand that narration is a part of our reference point. So narration becomes a reference point. So we can come to know why that discount on issue of debenture has come, why that securities premium account has come. Now, securities premium we have 20,000 and discount on issue of debentures we have 5,000. These two can be adjusted, which means the discount on issue of debentures can be adjusted with securities premium account. The securities premium account used to be there in liability, discount on issue of debentures used to be there in the asset. So if you adjust this, so how do you adjust this? It's called adjustment entry. So here what we can do is securities premium account debited rupees 5,000 to discount on issue of debentures account rupees 5,000, which means the discount on issue of debenture is there in the debit side, 5,000 rupees, that we are going to write off, by using the securities premium account. Hence the journal entry just put up the debit balance into the credit so that you can write off. So here the journal entry is securities premium account debit rupees 5,000 to discount on issue of debentures account rupees 5,000. Here being writing off the capital losses against securities premium account as per section 78. So Companies Act section 78 says this: you can write off the securities, you can write off the capital losses if you have anything against the securities premium account. So now we have passed journal entries mostly for the entire transactions except one. That one is the acquisition cost which was spent by the company during the point of acquisition, the cost of acquisition. It comes around rupees 5,000. The cost of acquisition comes around rupees 5,000. For that, it is part of capital loss for the acquiring company. So what they need to do, they need to spend that amount and treat that amount as part of capital loss. When there is a capital loss, then that loss can be treated as goodwill. We have seen in the previous lecture also this format. Please go through that if you have any doubt. So now the journal entry is goodwill account debited rupees 5,000 to bank account rupees 5,000, being the payment of cost of acquisition added to the goodwill, since it increases the cost of acquiring the business. So it is part of the acquiring the business. Hence, this has to be shown under goodwill in the asset side of the balance sheet. So now we have passed all the journal entries. We have completed all the journal entries as per the adjustments and transactions given in this question. Now we will be moving forward for preparing balance sheet. So balance sheet of Woodlands Limited. So what is the balance sheet? So in balance sheet, in all the items, whatever they acquired has to be debited. Share capital, what is the authorized share capital? That's the first item, right, in the balance sheet, authorized share capital. It will not be considered for totaling the liabilities. Authorized share capital only to showcase the how much is the total authorization the company has received from company law board, which means they can, at the maximum, they can raise the funds till authorized share capital. So their authorized share capital is rupees 10 lakhs. But now, how much is the shares subscribed and issued? We can call this as paid up capital. So we can call this as paid up capital of equity shares. So in this company, during the acquisition, they issued 10,000 equity shares at rupees 10 each. Only face value we need to pay. So within bracket you can also write, this has been issued to vendors as fully paid up for consideration other than cash. Please make a note because they did not receive any money. So 10,000 equity shares of rupees 10 each, that comes around rupees 1 lakh. The next is reserves and surplus. So under this heading, we have only one account, that is securities premium account. Securities premium account was 20,000, but after the adjustment of discount on issue of debentures, rupees 5,000, the securities premium account now stands for rupees 15,000. Because security premium, during the issue of shares, we got 20 rupees. 2 rupees per share for 10,000 shares. It comes around 20,000 rupees. That is the securities premium, actual securities premium what they receive. But after that, while making adjusting entries, we had issued a discount also at, we have issued debentures also at discount. That discount on issue of debentures was adjusted with securities premium. So 20,000 was the securities premium. Discount on issue of debentures is 5,000 gets adjusted. Then the result is the present securities premium. So it stands out rupees 15,000. The next is secured loan. So what is the secured loan? So they have 514% debentures at rupees 100 each. So the secured loan is the only one item they have, that is debentures, rupees 50,000. Next is unsecured loan. We don't have any unsecured loan as of now. Then current liabilities. So we have two current liabilities. One is bills payable and sundry creditors, which has been taken over from AB and Co as it is. So 16,000, 30,000. Do we have any provision? Yes, we have provision for doubtful debts. Either we can subtract that from debtors or we can put up under this. So that is always advisable to subtract from debtor because it is an acquisition company's balance sheet. After acquisition, what is the net value of debtors only we need to show. So hence here provisions we can write as nil. So these are the liabilities which we need to keep in mind while preparing this balance sheet, consolidated balance sheet. So now we need to move towards the asset side. asset side, so what are the balances are there? Fixed assets we have under the heading of fixed assets. We can write one by one. The first item is goodwill. So what is the goodwill? Goodwill we have two accounts. So already in the after the balance sheet, the company said the goodwill of the firm was valued at rupees 24,000. That is the fifth adjustments they have given during the revaluation. So 24,000 is the goodwill of the firm. 24,000. But apart from that, the company also spent rupees 5,000 on acquisition cost. It means the cost of acquisition rupees 5,000 is a capital loss that was transferred to goodwill account. That's what we have done. So cost of acquisition account debited to bank account. Since it is a capital loss, instead of cost of acquisition, you can write that as goodwill account debited to bank account. So now goodwill has been increases or decreases. Just think about that. Goodwill already they have 24,000. Now there is a journal entry called goodwill account debited to bank account of rupees 5,000 being the payment of cost of acquisition by the acquiring company. So the goodwill amounts 24,000 plus that capital loss, and that is the acquisition cost expenses rupees 5,000. Total goodwill now becomes 25,000, 29,000, 24 plus 5,000 to get 29,000 is the goodwill value. So this is where we need to focus, otherwise the balance will not tally. We need to update all the journal entries, whatever we passed and workings, while preparing the balance sheet. Next, land and building up. So here, the revised value we need to post. Already the face value is there, and there is an appreciation. The appreciated value has to be written. Then, plant and machinery, rupees 36,000, revised value. Furniture and fixtures, rupees 1,700, that is also a revised value. Investments, there is no investments is available. Current assets, loans and advances, under this we have stock as a primary current asset, rupees 18,000, then sundry debtors, rupees 48,000. Of this, the provision for doubtful debts have to be subtracted 1,200, so this is 46,800. Asset bank, we have to do a workings for this. So before that, let me explain why this has been kept in order. In order, because as per the schedule 3 of the Companies Act, it decides to present the balance sheet in a particular order. That's why it is not taken from the balance sheet as it is. It is kept in different order because it is the order defined under Schedule 3. So that's why first it comes goodwill, then the land and building, then plant and machinery. In such a way it comes. Okay. So highly tangible items comes. After long fixed assets comes first. And then second investment comes. Investment, even though it's not there, but here we can write as investment and put up as nil because the Schedule 3 advises to showcase the investment. Even if it is not there, it has to be there. Then current assets, loans and advances. So under this, stock and sundry debtors. Stock can be written as it is, but sundry debtors we need to subtract the provision for bad debts. But in earlier assets, either the appreciation or depreciation, which we did not show in the balance sheet. But here, for the debtors alone, we need to show the provision for bad debts. Reason is that there is a ledger account and it has to be maintained separately. Even in future, some people who assumed that they will not pay back, but if they comes and ask, comes forward and pay the value, then definitely it will get. We need to adjust against the same provision which we have allowed in the earlier period. And for the sundry debtors alone, the subtractions has been done, whereas for the other assets, the separate subtractions has not been carried out. So that is most important to know, because all other depreciations and appreciations, we made alterations only in the workings, but it not so in the balance sheet. Whereas only for sundry debtors, the subtracting item we have shown in the balance sheet, assuming that the provision for bad debts ledger exists. Whereas the appreciation and depreciation will not exist, because the Woodlands company is acquiring A, B and O, and they start from their new date assets. So from today, from this the day of acquisition, they may decide the depreciation percentage based on their experience, and then they will follow as per their written down value method. So hence, in all other assets, they did not show the depreciation or appreciation separately, whereas for the sundry debtors alone, we have shown the adjustments separately. The next is cassette bank. This is another important area which we need to have and working. In the question, if you see the question, the bank balance, how much is the bank balance? The bank balance in the question is rupees 29,000. Of this bank balance, what are the things that have been done? We have made two payments. One is purchase consideration. We paid the balance amount in cash after issuing the equity shares, after issuing the 14% debentures and discount, after issuing the equity shares at premium. For these things, the balance we paid in cash. That balance we calculated also. So what is that calculated amount? So the calculated amount is rupees 17,500, which the acquiring company have been paid to the vendor company. So amount goes out. Already we have 29,000 in the bank account at the time of acquisition. Of that 29,000, 17,500 flows out as part of payment, to the vendor company. So 29,000 subtract 17,500. Then keep the reserve, keep the balance. Then have we made any other payment? Yes. We also made a payment for acquisition cost, for meeting up the acquisition cost, or formation cost of the company, which were transferred to the goodwill account, but we have paid the amount. To bank, there was an entry. If you refer that entry, the previous screen, there is an entry called the goodwill account debited to bank account. So now 5,000 is paid on this. So we already have cash balance 29,000, and we subtracted the balance paid in cash to the vendor company, rupees 17,500. Now the balance is 11,500. Of this, the company have met cost of acquisition for rupees 5,000. So if you subtract this 5,000, you will get 6,500. So 11,500 minus 5,000, you will get 6,500 as cash at bank. That amount have to be written in the balance sheet as shown in the screen. So then the last item is loans and advances. First item is the fixed asset. The last item in the asset side is loans and advances. So here we have only one thing, that is bills receivable. So there is no revision. As it is from the balance sheet, we can take 13,000. Now we need to ensure, have we covered all the journals? Have we covered all the calculations? Have we covered all the information which were given in the question while preparing the balance sheet? If yes, then it's really good. If it's really good, and the balance sheet will get tally. If not so, if anything missed, then the balance sheet will not get tally, and we will be held up in between. So we please go through step by step. So first, go through the question in detail. Understand the question in your own language. Understand the question's sequence also. And then mark all the questions adjustments with respect to particular account. And then do all the workings for either depreciation or appreciation or increases or decreases. Whatever, if they give some percentage. And then proceed for solving the sum. This is the preliminary steps we used to come up with. So if you are good in preliminary steps, then half of the problems you can. So as soon as you complete the preliminary steps, then it gives you an input to solve the sum as per the procedure. The first one is calculation of purchase consideration. So now, if you have your proper workings in all the area, now we can straight away calculate the purchase consideration as we have discussed it before. So start from the net realizable value of assets. First to take the assets which are realized as it is, without any adjustments, without any increase or decrease. Then take the assets one by one, whichever has either increase or decrease, and then subtract the liabilities part, that is external liabilities, creditors and bills payable. They have only two. So that amount has to be subtracted to find out the purchase consideration. So here the purchase consideration is rupees. We have found the exact amount as rupees 1,82,500. Please see that 1,82,500 never displayed in the balance sheet, where rather it has been posted in different forms: share capital form, debenture form, cash form. So it has been adjusted. So likewise, calculate the purchase consideration. The purchase consideration calculation is the prime step in the acquisition of company. So if you calculate that in a proper order, then it makes you to be perfect for passing journal entries as well as preparing the balance sheet. So based on the calculation of purchase consideration, then different forms of payment has been made as per the question stated: equity share capital, debentures and balance in cash, how much it is. So make that calculation also. We have two major calculations: purchase consideration as well as the different forms of payment of purchase consideration. And using these two as journal entries. So there are standard journals. The maximum 6 journal entries will be there. Keep that in mind, or refer the previous lecture. There I have explained why a particular account need to be debited and why the other account to be credited. So all these things we discussed there, and pass the standard journal entries, post the amount from the purchase consideration calculation and the distribution of cash calculation, equity shares, debentures and cash calculation. Then after passing journal entry, put up everything and update the balance sheet. The balance sheet, whenever you prepare, don't have the generic items as it is. Prepare as per the Schedule 3 of the Companies Act as they advised. So start with share capital, authorized share capital, paid up share capital. So likewise. And have the proper headings while preparing the balance sheet. So now this is the full-fledged balance sheet. It got tallied. It has got tallied 2,11,000. So with this, let me stop this lecture on acquisition of company, and next class will be focusing on the next chapter, that is profit creator incorporation and the another important area. So with this, let me stop. Have a good day to all, and have a wonderful weekend, and appear for the multiple choice question test in the SWAYAM platform on time. Thank you. Have a good day.